Happy Monday, folks. Happy 4th of July. More importantly, hope you're having a wonderful holiday weekend. I know the market is not open today, but I want to shoot this video anyway just so that it was here for you whenever you are ready to take a look at it. Realize most of you are out enjoying your weekend. I am doing the same with my family, which, it's nice to take a break now and then, but I wanted to still put this out for you. This way you had it when you were ready to sit down and take a look at it before we kick off the week. So it is Sunday night. It's about 9:30 or so as I shoot this video after I got back from a weekend of golfing. Markets are exhibiting some weakness across the board. So we'll see what that equates to. Volume is going to be super low in the futures market tomorrow, which is it's a shortened day anyway. We'll see what Tuesday holds, but I did update the charts. I want to walk through them with you real quick, and as always, they are 100% available to you for free by just following me on my TradingView account. So you go to tradingview.com and you search for Special Analysis, and you'll be able to find the picture of myself and my wife, and you'll be able to follow me. And every time I post something, you'll get a notification emailed directly to you. So without further ado, I'll open up the chart. We'll take a quick peek. It's going to be rather brief tonight, only because, again, it's a holiday weekend, but this is still important. So, taking a look, first up is the Dow Jones Industrials Futures Average. You could see, definable downtrend here by the orange channel. This break here didn't offer much to work with, unfortunately. So we'll see if we do get a settlement either this week or next week below this teal channel, and then we can look to trade this potentially much lower. So there could be an opportunity brewing here, and I think that this is going to be consistent across the market. We're really just in a holding pattern. We're waiting for that next breakout to occur with confirmation, and then when it does occur, that's when we can set it up. But you can see teal channel structure is not as aggressively descending. The orange is more aggressive. But that's what we're in the midst of, guys. We're below the 200-day moving average. You'll see this changed on, really the trend changed on the week of January 18th. And you'll see that across every one of these indexes. Party's over to the long side. I'm not saying that it won't resume at some point, but for the moment, the bias is short. So if you're following somebody, or you're trying to buy the market at support, or you're trying to bottom feed, if you plan on holding it for a long period of time, that's fine. But if you're looking to trade something for the next couple days or couple weeks, my bias, at least at the moment, is to the short side. There's very few things that are wildly bullish at the moment. So just be cautious. It's just a word of caution. Listen, you can make a crap load of money to the downside. So it's not that it's upsetting. It's just a matter of, listen, most people are looking at their retirement accounts and they're not terribly happy. So here's that week of January 18th. Again, you can see settled below the 200-day moving average. We broke our very nice uptrend here, and this is really where we start to set our impulse correction, correcting, consolidating. You can see we're fighting some form of support here. But again, if we get a break below the teal line, we should have some price action to go to the downside. And again, consistent on all of these. Next up is the S&P 500. We're sitting right at support right now. So if this week does break below, we get that 1% confirmation. We could really look for a nice target down in the 3,300 handle, perhaps. Low 3,400 handle. So, we're just monitoring it, and that's what happens. So the idea is to capture these impulses and then wait for these corrections to reset up. So that's exactly what we're doing. You can see again here, the week of January 18th, broke the 200-day moving average, impulse correction, impulse correction, impulse correction. So the downtrend was set in place fairly consistently across the board, for the week ending January 18th. That's when I really turned into a bear. I know, it's just a pullback, and listen, it could have very well been, but by the time we set some lower highs and some lower lows, and the trend was in place, it was clear that the party was over. Again, is it over forever? Probably not. But is there, could there be some further downside pain? Yeah, it's very possible. Russell's sitting at support over these past couple weeks. We would need to see it break below this black channel for it to potentially go lower. We have an orange descending channel and a yellow one that's slightly more aggressive. But again, the bias is to the downside. Here is January 18th. right there. So had already been trending below the 200-day moving average, but we had broken a primary support structure. So that was, again, just reconfirmation that we were already starting to break down. We settled below the 200-day back in November. So, this was a small caps typically leading indicator. Saw the market start to change. It is what it is, guys. Listen, you can't be afraid of this. You just need to face it head on, build a trade plan that works in, bull markets and bear markets, and you just live to trade another day. It's really just that simple. Is it frustrating? Listen, life's frustrating. It's hard to buy the market long sometimes. It's hard to sell the market short sometimes. But what you want to have is a plan that is so conservative that it becomes consistent. And that consistency is where, you sleep well at night. Gold futures starting to crack. This does not offer us a confirmation to short, but you can see under pressure thus far this week. Definable downtrend here. This market hasn't really gone, much anywhere in the past almost 2 years, where we've had this V shape. Some pops along the way. This was a buying opportunity to here, which worked out nicely. We identified that, but then since this fell back down, essentially it's just worked its way back to a long-term piece of key support here. But we'd have to see this again settle below by our 1+% confirmation, and then look to trade this potentially lower. Next up's crude oil. Still working some form of widening support here. Is the party over? I don't know that I would say it's over, but I would like to see some type of settlement above these tops here to reaffirm that we're going higher. That would be ideal in my opinion. So we're hovering around support in this widened channel here, but I'd really like to see a break above this, what we call a counter trend line. That would really put my faith back into this market grinding much higher from where it is currently. Next up, dollar index. Clear, obviously defined uptrend here. Impulse, little consolidation, impulse, correction, big impulse, big correction. We're fighting an area of resistance that we have failed to A, trade through, and B, settle above. So we'll wait to see if this pulls out. If this does, this puts us on the track to the 110 area. So it could be exciting to see, but it's still a matter of getting that confirmation. So if you're looking for what's trading inverse of the broader markets, it's found right here in the dollar index. Normally we see it in gold. That's not the case this time. So in this instance, the dollar index is what is trading inverse. So we have been selling off the markets from essentially the change of the year, 2022, and you could see this market has grinded its way up 10% as the the broader markets have come down on average close to high teens, close to 20%, adding them up and dividing them appropriately. And last but not least, we will look at Bitcoin before we take off for the evening. Again, I know it's 4th of July tomorrow. Markets are closed. Futures markets are open for a partial day. But again, Bitcoin, definable downtrend. You can see we've broken it. Here's your impulse. Here's your consolidation. Here's your impulse. We did capture some of this along the way on some, different structures, looking for some kind of support in the 15,000 handle. I don't know that it's necessarily going to hold the price, but at least we're expecting some type of reaction, whether it be a bounce or a reversal or a pause or whatnot. But that's what we're looking for at the moment, and we'll see where it goes from there. I mean, ultimately, all we can do is take this 1 week at a time. That's why I update this major market, weekly video week to week, simply because it changes week to week, and we need to be aware of it. And that's how, for us, it gives us the opportunity in order to, partake in the markets being well informed, and that's the goal. That's the reason I do this for you guys 100% for free week to week. Throughout the week, I cover ideas and trade strategies and past performance and trade studies, case studies, and things of that nature. But on Mondays, we start off every week just the same, and that's going over the broad markets. So with that, happy 4th of July. I hope you had a great weekend. I hope you're enjoying your day off today. God bless America. we're all here because some chose to fight to have this country. And it is, by far the greatest place on the face of the earth. That's why everybody wants to come here. So let's keep it that way. That's the best we can do. We as patriots, we as citizens of the United States, we want to see what's best for our country, what's best for our children, what's best for our future. So again, I hope you have a wonderful day. Be careful with the fireworks. Enjoy the barbecue. Enjoy your friends. Enjoy your family. Enjoy the beers. And we'll touch base tomorrow, and we'll cover what our plans are for this upcoming week. But with that, again, I just wish you a beautiful and blessed holiday, and enjoy yourselves. All right, and I will talk to you tomorrow.